In this presentation, we will continue with our comprehensive problem. We're going to go to step 3 of the 4-step closing process. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Up to this point, we have closed out the revenue to the income summary, then the expenses to income summary, that being step 1 and step 2 of the 4-step process. Step 3 of the 4-step closing process will be on the same date, and we'll be now just closing out the what's in the income summary to retained earnings. So as we do this, just note that the double check once again is going to be that, okay, why are we doing this 4-step process? Why do we even have this income summary account? We could argue that we want to have that so that we can kind of give a check before we complete the final process. Also note, in book problems, they'll often refer to the income summary account as a way to say, how do we close net income out, to say, like, if it was a partnership, to the capital accounts. So you got to have an idea of what it means to have the income summary account for a few different reasons. Therefore, for the check figure, we can say, okay, this should have net income in it, and that's what we need to know. So if any kind of problem says, the income summary account has something in it before we close it out to the retained earnings, they're talking about net income. Net income is in there. If we have to allocate the income summary, the net income, to something like partners, then they may phrase it that way. People may phrase it, well, the income summary account has 7,100 in it before, allocating to the partner account. Well, that means net income of 7,100 that we now need to allocate. So if this equals net income and all the income accounts are now 0, we've achieved the goal of the first 2 steps and therefore can move to the next step, which is simply to move this, close it out. That's why it's a clearing account, make it go to 0, and move it to the retained earnings. So in other words, we need to make this go down to 0. It has a credit balance. The way to make something go down is do the opposite thing to it, a debit. So we're going to debit the income summary, right click and copy. Income summary, put that in cell B16, right click and paste, 1, 2, 3. The amount's going to be that 7,100. Now again, you might be tempted, because I've been telling you to use formulas a lot, you might be tempted to say, why don't I just say negative of this number and enter. So that'll cause us a problem, similar problem we've seen before, but I'll just show you that problem just so you can see, because I want you to use references as much as possible, but just note when these problems happen. And then negative of this number, we're going to credit something, that will be retained earnings. So retained earnings is going to be a credit going up in the credit direction. We'll copy that, we'll put that in cell B17, right click and paste, 1, 2, 3. I'm going to indent this. It's probably indented for you already by going to the Home tab, Alignment, Increase Indenting. Now we'll just post this out. So here's the income summary. Here's the income summary. We're going to be in the middle column. We're going to double click on it, go to the end of it, and say plus, and then point to that income summary. And we're going to have a problem. And then we've seen this before, that's that circled reference. So just note that it's tempting to do that, but of course now we use this number to get to that number, and then we said we want to change this cell by the cell that we used to pick up that number. So that's a circled reference. So just how can we get around that? We can't use this, we can't use a formula. We can't say that this is coming from there and then use this to change that number. So we have to just use a hard-coded number, which is just going to be 7,500 or 7,100, and enter. And so that'll fix it. So now this is posting over there fine, brings it down to 0. That's what we would expect. And then we go to retained earnings. So here's retained earnings. We're going to say equals, point to that retained earnings, and enter. So now where we're at now is we got all the income statement accounts 0. That's what we want. And we've closed out the income summary account. And remember, the income summary is like a super temporary account. It's a clearing account, I usually call it. And that means that it's not only going to, it's going to be 0, like we probably did this in the same day, meaning, whereas the income statement accounts are temporary because we add them up usually for a month or a year and close them. This is really temporary because we only use it for like the closing process. It's 0 before, it's 0 after. And now we've moved it to the net income to retained earnings. Now, retained earnings is what's in the net income is in retained earnings now, but note that if we had multiple years, multiple months, then we wouldn't just have 1 month of retained earnings. It would have the beginning balance, how much was earned in the prior months, less any draws, any dividends, and then the current retained earnings would be here. For more accounting information and accounting courses, visit our website at accountinginstruction.info.